The stock market is starting the week on a bearish note, losing gains from the previous week. The drivers of the decline at intraday today were Royal Exchange, UBA and Zenith Bank. Mukhtar Mohammed, analyst at Assar Investments, joins me now for more market updates. Mukhtar, thank you so much. It's a pleasure to have you on the show.
Thank you, Esther. Happy New Year.
Happy New Year to you too. Let's get right to it. We saw the All-Share Index up 2.5% last week. All the sectoral indices were up, I think with the exception of the insurance sector. So that positive momentum is starting the year on the part of investors. But we're seeing some of that, some profit taking, some market correction. But walk us through trading today. Who are the biggest winners and losers? And what are those stocks that you see on investors' radar this week?
I think we're not seeing much of the winners today. And if you want to say most of the winners are mostly equities that were losing some weeks back. They're just struggling to do some little bit of recovery. But what we see the biggest losers in the market today is definitely the banking sector, like you pointed out in your report. And that is, we see Zenith Bank, we saw GTCO, we saw also Assets, also even UBA. So most of those profit taking have gone into those equities. And sometimes, again, it could be a market correction. And again, sometimes also it could be they've been pricing already. So when you start having the result comes out, you don't see so much activities in those space. So definitely, I mean, it's expected. It's not new for this season to see what is happening now, especially when you know that most of the portfolio investors have rebalanced their portfolio sometime in December. Some of them have were the ones that made that. You saw those bullish run in December into January. So you see a little bit of slowdown until those results comes out. And if those results are good, those results doesn't so much make impact these days. But when the first quarter result begins to come in, then you see the re-entry of these portfolio investors again. Then you see a gradual return to stability in the market, especially for equity that are doing very well.
Right, I was going to ask you about, staying with the banking sector, I was going to ask you about their profit margins, what you see ahead for profit margins, what do you see also for the regulatory environment, and also loan book. We don't talk a lot about the bank's loan book growth. I know that for a while, in the last couple of years, they've stayed within their traditional, of course, the traditional sectors, oil and gas, but then we haven't seen that much growth. But what do you expect this year for the banks in terms of how they're going to grow their loan book this year?
I think most of them will look at the consumer space. They are beginning to look at that. If you go to the bank, the kind of product they have for their customers now have to do with consumer type of product. So definitely we'll see that being their giving up their loan book. But this all will only be given to most salary earners. And that's where the challenge, that's the formal sector, the informal sector, which seems to be where it could drive their profit margin high, is suffering from a lot of microeconomic instability, especially going into the year with the budget and looking at a new administration coming in. So definitely the bank will want to concentrate more on salary earners, those that have fixed income that are coming in regularly. So the people that they will focus on. And especially again, you know we're going to an election year also. They want to focus on those ones, then look at the policy that the new administration will come into, and then they begin to look at other sectors that they will begin to drive the economy. So, like you pointed, the oil and gas sector is one sector that have not really reached their loan book, but you could understand why it happened. It wasn't because that sector was not bullish, but you know that sector has its own challenge that has to do with subsidy, and also oil theft came into the whole issue. So definitely, I'm not surprised in what you are saying in that space. So if you ask me this, I think they will concentrate more on the consumer customers for the first between first 6 months. And when the new administration come in, depending on the policy drive of the administration, you will see the bank begin to look at those areas to grow their loan book and also improve their profitability. In terms of profit,
okay, go ahead. Complete your thought.
In terms of profit, I think the profit also might be a little bit not like what we saw last year. Especially, there will be a lot of slowdown. There will be, and again, there will be a lot of refinancing of most of their loan book also to some of the customers because of economic issues that have not really been nice. Especially when you look at those companies, the manufacturing sector, and also the consumer goods sector. So definitely, we might not see those loan books grow that much like we saw some time ago.
Now, I was going to talk about the consumer goods sector. We have just about 1 minute left. Of course, budget projections for this year for inflation, somewhere around 17%. We're expecting inflation numbers to come out today. We're still keeping our fingers crossed on that. But talk to us about consumer goods companies this year. Of course, innovation is always a keyword for them, looking at ways to make life better or easier for the consumers in terms of their purchasing power. What are you expecting from these companies this year?
I think they'll do better this year. They'll do better this year comparable to last year. I expect because of, like I said, because of we are already in an election year, coupled with the with what we've seen happen from what we'll see happen from that space into the half year. I expect them to do better. But again, with the news also coming out today that we are looking at reviewing of the national minimum wage, also that would also have a positive impact on the consumer goods sector, because that means once Nigerians start earning more, then they will be able to consume more, and that will definitely show in the bottom lines of these companies. Well,
let's keep our fingers crossed on that minimum wage consultation. Thank you so much, Mukhtar, for talking to us today. Mukhtar Mohammed, analyst at Assar Investments.